makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone. Happy Friday. Welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter. And here's what's coming up on today's program. Alibaba loses around 10% of its market value in Hong Kong after scrapping a plan to spin off and list its $11 billion cloud unit. Oil heads for a fourth weekly loss after entering a bear market dragged lower by concerns over a supply glut and weaker demand. Plus, pound again under pressure after UK retail sales post a surprise drop in October. Now let's take a look at the European markets map. It has been quite a week in terms of politics, but also in terms of some of the market movements that we've been seeing out there. A lot of the focus over the last couple of days have also been on earnings. Now, European shares opening a little bit higher overall. I guess there have been some fresh signs of economic slowdown prompting investors now to ramp up bets on interest rate cuts next year. So the focus still firmly on inflation and what central banks do. But it's very clear that there's also going to be a bit of a shift looking at some of the earnings and maybe some of the undervaluing values at some of the big companies. Now, oil prices also dropping into a bear market, some 20% lower from their September highs. Now, let's take a closer look at the markets. Joining us now is Benjamin Jones, Director of Macro Research at Invesco Asset Management, and also joining us, Bloomberg's Paul Dobson. So, Ben and Paul, thank you for joining us after quite a week, actually, that we've had overall. Ben, when you look at some of the stock's valuations, I know it's all still to do about central banks, which is why we're seeing this whipsaw. It's like, will they cut, will they not?
Yep.
But when do we go back to more fundamentals?
I think that'll be an underlying base case. And I would say that we have seen some impact of fundamentals over recent weeks. With earnings season, what you've seen is companies generally coming in with better than expected earnings, as you would expect to see, but revenues coming in quite a bit weaker, actually, some disappointments there. And where you have seen the disappointments, you've really seen those companies being hammered. So I think, yes, we get caught up in inflation, and that's clearly important. That's going to be very important for multiples. But actually, we are seeing some impact of fundamentals at the same time as well.
Yeah, Paul, are you seeing the same? I mean, you write about this day in, day out. How much of it, will also be, I guess, on earnings and some of the underlying strengths and not only central bank action day in, day out?
So I think going into...
let me ask Paul, and then I'll come back to you. It's like a bit of traffic. Paul.
I think that I would agree, though, it's that it's the focus on volume versus margin and all the rest of it. Companies that have been able to pitch their pricing at the right level seem to have managed to scrape through. But it's the sort of, the staples that are doing better, not the luxury goods companies, because, there's this sense that the consumer is under pressure somewhat. The savings that have been sort of drawn down. And so, the outlook for the consumer and for the economy isn't looking that great. And we've seen that in the likes of Walmart commentary. We've seen that in the likes of Caterpillar commentary. We've seen that in the likes of people talking about advertising spend like Trade Desk as well. So cracks starting to appear everywhere that you look, I think, across the earnings spectrum this quarter. So,
Paul, when you look at oil prices dropping into a bear market, is that a sign of a worry?
I think it's the similar sort of theme. I know that there's a strong supply element in here as well, and some of the demand factors like China are kind of technical as well. But for all that, the fact that inventories are building in the US, I think also points to something of a weaker consumption pattern going on. That idea of a slowdown starting to trickle through into the market in various other places too.
Ben, when you look at the U.S. economy, will it really remain, more resilient than maybe others expected?
I think so. I think that's going to continue into next year. We know that the US economy is far less sensitive to interest rates because of two things, really. The consumer is largely on fixed-rate mortgages, and although we look at these scary headline numbers of 8% mortgage rates in the US, no one really in the US is paying 8%. The effective rate is closer to about 3.5%, 3.6%, and it's barely budged from those lows that we saw last year. So the consumer's not feeling the real impact of those higher interest rates. They still have a reasonable buffer of excess savings. Again, that is unevenly distributed, but in broad aggregate terms, there is some excess savings there. And also, broadly speaking, companies have really termed out their debt. So again, there will be pressures being felt by some companies, and it's going to be very uneven. But in aggregate terms, I think we're still going to see a relatively robust path for the US into next year, whereas somewhere like Europe and certainly somewhere like the UK, which is much, much more sensitive to interest rates through the path of mortgages, through the path of variable rates on corporate debt, there is where I think the greater pressure is going to be felt.
So, Ben, do a lot of equity markets then have to catch up? I mean, there's this odd thing. We're actually 6 months down. We're also always expecting the worst for the U.S. economy. Yeah. And then actually you're seeing indicators and it goes back up. And it takes an adjustment time for the S&P and others. It
does. And look, I'm probably more positive on the US economy than I am on the Europe and certainly on the UK economy at the moment. But that doesn't directly translate into the way that I would be investing from an equity perspective. In fact, my favourite equity market at the moment would be the UK equity market, because valuations here are much, much more attractive. And ironically as well, if the UK economy weakens, and we've seen it with some of the retail sales numbers this morning, sterling weakens, that's good for those overseas companies that are listed in the UK. To a slightly lesser extent, I think the same is true of Europe. There's more valuation, or certainly more opportunities in Europe there to get attractively valued companies, where there is still a little bit of growth and where their balance sheets are fairly robust.
Interesting. Paul, what's your take actually on China? So we had the Biden-Xi meeting earlier this week. Is it about the economy or is it more about just geopolitics?
Well, a bit of both. I mean, I think that the Alibaba news that we had in the last 24 hours about them ditching plans for the IPO of the cloud business is the last thing that the market's needed right now in what was supposed to be like a positive week. You know, you have the Xi Jinping trip to the US, which I guess he would have judged to have been a success. The eco data even in China was starting to push it a little bit more positive, but the market response has not been a full and enthusiastic buy-in. And so even in some of the companies that have been reporting more favourable earnings, the market hasn't really embraced that. There's still that scepticism that, you know, we remain to be convinced kind of perspective from investors. And I think that in order to bring back that investor confidence, we're going to need to see a lot more coming through on the policy support front and a lot more of a turn in the economic data to a more favourable kind of scenario.
But Paul, what's your take? I mean, what's the Alibaba story longer term? So this is a lack of investor appetite. Is it something wrong with the company? At the same time, we had some pretty shocking FDI figures that, you know, they're negative for the first time going into China. So there will have to possibly be things to support businesses there.
Yeah, I think from Alibaba's perspective, it's convenient in some ways to do it because the cloud business has not been growing as expected and maybe needs more capital to be injected into it. So holding it within the company may make sense, but it's disappointing for investors because they were hoping for the payout from that. That was one of the cause of the sort of strategy that the company was pursuing going forwards. I think it also, though, tells a story about the sort of pressure that the Chinese consumer tech companies are feeling, both from the sort of outside pressures in the US weighing against them, but also the internal competition. You know, margins are low, discounting has been strong. Yes, sales volumes were good over the recent boom period, but for all that, you know, it would seem due to some heavy discounting, and so that's not necessarily a rosy picture overall for the companies or for the economy.
Yeah, Ben, what's your take on China? How do you play China, actually, given all of this?
Yeah, with difficulty. I mean, I certainly wouldn't be jumping into China and just buying the index blindly at the moment. I think it's much more about getting those selective opportunities right now. And I think Paul's right. We would need to see broad-based, big policy action to get us to want to dive in with a more sort of broad-based fashion. But I think if you look at what particularly Xi Jinping and the Chinese authorities are saying, it's less about the economy right now. It's much, much more about security right now. And that, for me, means we're not going to go back to the period that we saw sort of 2015 before the COVID pandemic, where you got some weakness and you got this flood of liquidity, this flood of stimulus into the economy. It's going to be a lot more piecemeal. It's going to be a lot more nuanced. It's going to be a lot more precise. Now, One way I was originally thinking about this is, well, perhaps you then go and you buy those areas that the Chinese authorities are trying to support, perhaps the domestic industrial space, health, those sort of things. But actually, I think that's probably the wrong way to think about it. What I think you maybe want to do is avoid the areas that are most at risk of regulation, and you want to avoid those areas that are perhaps most at risk of getting the influx of capital from the authorities, because that's where there's the chance of a misallocation of capital. Whereas if you go down sort of the middle route, where those areas are that are kind of just going to be not looked at by authorities, both from a positive and a negative stance, then you're likely to get better allocation to capital. So that's more of some of the consumer domestic areas, some of the autos areas as well, which are doing very well at the moment, and we're seeing them really grab market share in China. So, look, I'm not a stock picker, but I think China is a stock picker's universe at the moment, rather than someone that goes and says, look, I'm just going to go and buy the Chinese index today.
So interesting. Ben, thank you so much for joining us. Benjamin Jones, their Director of Macro Research at Invesco Asset Management. And thank you as well to Bloomberg's Paul Dobson. Now, we're just getting a bit of breaking news out of Applied Materials. It's 9:10 a.m. UK time, which means that usually you get this pre-market check. It's one of my favorite things to do all day because it really gives you an indication of, I guess, the reaction of investors to some of our top stories. So Applied Materials, the largest U.S. maker of chip-making machinery, of course, is down 6.8% following a report that it faces a U.S. criminal investigation for allegedly violating export restrictions to China. We'll continue following Applied Materials very, very closely. Pre-market, that share price just opened. Coming up, Alibaba shares closed about 10% lower in Hong Kong trade. So what's on the horizon for the Chinese tech giant? We'll discuss that next. And this is Bloomberg.
This, at first glance, is just a smartphone. But once you know what's inside, it becomes clear it's so much more than that.
So what really changed everybody's view of this device was what was at the heart of it. The microprocessor that was designed and manufactured in China.
It's at the center of tensions between the world's two biggest economies. The phone made by Chinese tech giant Huawei represents a breakthrough by Beijing as it tries to escape Washington's controls on its access to technology and establish a self-sufficient chip industry. If those U.S. controls had been successful, then a smartphone as advanced as this simply should not be possible without importing key components.
China now is more capable than ever of building advanced technologies.
And it worried U.S. officials who are more concerned about advanced chips going into military equipment than smartphones. It left them wondering, how exactly did China do it?
So that's Bloomberg's mini documentary, When Huawei Shocked America with a Smartphone. You can watch the full version on your Bloomberg terminal on Bloomberg.com or on our social media. You don't want to miss one. It's really a great piece. Now, staying with U.S.-China tech tensions, and $20 billion has been wiped off the market value of Alibaba. This comes after the e-commerce giant scrapped plans to list its $11 billion cloud business. Well, Robert Lee from our Bloomberg intelligence team joins us. And Robert, scrapping the plan isn't a complete surprise, but why has the market actually reacted so severely?
Yeah, well, as you said in your intro, I think there were two things, really. The numbers themselves, that the quarterly results sort of confirmed existing concerns about rising competitive pressures in China's e-commerce sector, and also looking forward, the scope for a weaker consumer into next year. But those are not new concerns. As you mentioned, what drove the stock down nearly 10% locally here in Hong Kong today was the fact that they've pulled the IPO plans, or at least put them on ice for the time being. Why did they want to IPO and spin off these various businesses in the first place? Well, Alibaba is a conglomerate, and it suffers a conglomerate discount. The stock has been far from the best performer locally or globally over the recent past, and therefore the logic behind the spin-offs was to return value to shareholder, going along the logic that the sum of the parts is greater than the whole. So this apparently shock announcement to the market that they are now pulling the IPO plans, has come as a major surprise. But I do think there were some warning signs there beforehand.
So overall, why did Alibaba actually pull the cloud IPO?
Yeah, well, I guess I asked a bit of a rhetorical question there. The warning signs were, first of all, Daniel Zhang took over the CEO role in the summer of this year. Within 3 months, he walked away from that role without any proper explanation. So for your newly appointed CEO to be moving, just ahead of a potential IPO, obviously raised some fundamental questions about what's going on in the company. But secondly, if you look at the actual numbers that Alibaba Cloud's business has been reporting in the last few quarters, or in fact for a longer period than that, there are two things. One is the company's been losing market share in a viciously competitive cloud sector in China, along with its main peer and rival Tencent. And secondly, the revenue growth that the company's been delivering has almost come to a complete standstill. So, for example, in the quarterly results they published last night, the annual revenue growth in the cloud business was just 2%. So investors, what a growth story to get their teeth into when a company IPOs. The growth story is just not there with Alibaba Cloud at this point in time.
Robert, thank you so much. Robert Lee there from Bloomberg Intelligence in Hong Kong. Now, UK retail sales fell unexpectedly in October, with retailers blaming the cost of living crisis and bad weather for the poor performance. Economists were forecasting a rise of 0.4% for the month. Instead, sales fell to their lowest level since February 2021, when COVID restrictions were in place. Well, joining us now is Anna Andrade from Bloomberg Economics. Thank you, Anna, for joining us as always. I mean, this is a bit of a weird one. If you look at retail sales, they weren't great. So what does it tell us about the UK economy?
Hi, good morning. So, yeah, the retail sales number is kind of the first data we had for the fourth quarter, and it doesn't suggest that it was a good start to the quarter. You could blame the weather a bit, but I mean, I think the most likely story is one of sustained weakness in the economy. And the reason why I'm saying that is that in the GDP release we had last week, we already saw private consumption falling on a quarterly basis. So that's there. And we know kind of that the impact from past tightening from the BOE is landing now, and there's still more to come. So I think, it doesn't look great.
So, Anna, is the economy weakening enough so that inflation continues to go down? I guess that's the million-dollar question for the BOE.
Yeah, I mean, that's exactly it. That's the question. I mean, if you think that trend growth in the UK economy is 0.3% quarter on quarter, anything below that will kind of add to these inflationary pressures. But the question is that the BOE wants to get to 2% in a very timely manner. And the question is whether, if the economy continues to stagnate, that will kind of then, bring inflation down. The experience for the past year is that it won't. An economy that's stagnating, a labor market that's resilient, it won't help in bringing inflation down. So our view has been for a while that more weakness is needed, and that this mild downturn that we're forecasting will kind of help a bit the BOE in getting to 2%, but that's only in kind of early 2025.
So when can we expect cuts? I know we also had this interview with Megan Green yesterday. She was really pushing back against any cuts that are even priced in the markets.
Yeah, I mean, our view has been that the first cut is likely to come in August. The BOE will have to balance two things: a weakening economy and inflation remaining kind of above target. Now, because of the experience of the past year, and they tried so hard to bring inflation back under control, we think that they won't let go before there's significant progress in inflation. Now, that doesn't mean that they will only cut when it hits 2%, because, again, that's early 2025. But it might mean that, by the time it gets to 3%, and if the economy is weakening, there might be, an opportunity there to cut rates.
Anna, thank you so much. As always, Bloomberg Economics, Anna Andrade there. Now, plenty more to come. This is Bloomberg.
I think each of the races has a different character, and they're very have characteristics which make them unique and special and all worthy. I do think Vegas is going to be unique in that it's a night race down the strip on a Saturday night. I think it's going to be iconic. The visuals will be amazing. And I am not worried about demand, because we have been lucky enough to see interest in Formula One explode here in the U.S.
That was Liberty Media's chief executive remaining upbeat about the F1 race in Las Vegas this weekend. The company which owns F1 has poured hundreds of millions of dollars into building the street track and infrastructure around the city's famous strip. But hotel room rates and ticket prices have been tumbling leading up to the weekend race, with organizers actually struggling to sell the last remaining seats. Now here is what else we're looking at for today. At 10 a.m. UK time, we get the final CPI reading for the euro area. U.S. housing starts data actually comes in at 1:30 p.m. UK time. And then finally in the afternoon, we'll also hear from a slew of central bank speakers from the European Banking Congress. Now, a couple of things that we need to watch out for is Applied Materials, lower pre-market, that pre-market share price actually opening just about 30 minutes ago, less than 30 minutes, maybe 20 minutes ago. So this is the largest U.S. maker of chip-making machinery, down 7%. This follows a report that it faces a U.S. criminal investigation for allegedly violating export restrictions to China. So we'll have a full roundup, of course, on that shortly. Coming up, Spain's Prime Minister Pedro Sánchez wins re-election, but the socialist leader is starting his new term facing a strong backlash. We discuss that next, and this is Bloomberg. Alibaba loses around 10% of its market value in Hong Kong after scrapping a plan to spin off and list its $11 billion cloud unit. Oil heads for a fourth weekly loss after entering a bear market, dragged lower by concerns over a supply glut and weaker demand. Plus, the pound is again under pressure after UK retail sales post a surprise drop in October. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the French Finance Minister Bruno Le Maire will travel to Germany this afternoon to discuss reforming the EU Stability Pact. This comes as the euro area's two most important economies look for agreement on new fiscal rules. Now, for more, let's bring in Bloomberg's Maria Tadeo in Brussels. Good morning, Maria. So, Le Maire meets Lindner. What's the goal there?
Yes, Francine, it is about fiscal rules. We are finally talking about fiscal rules because this is a story that has played almost as a slow burner in the background, very under the radar. But as you know, the fiscal rules famously or infamously, depending on who you ask, is one of the key pillars, essentially, of economic governance in the euro area. Now, by now, it is understood they were suspended when the pandemic struck. They will be reinstated next year. But if they are reinstated the way they work at this point, some countries will be in for a severe adjustment. So the goal now is to get to a reform of the fiscal rules that can accommodate both sides of this debate. And it's interesting, this bilateral meeting is happening today between the French finance minister and the German finance minister because they really exemplify the two sides of the debate. It is also understood at this point, Francine, that unless they agree, unless the French and the Germans agree on the basis of a new reform for fiscal rules, this will not move at a European level. And the clock is ticking because they have to agree before the end of the year. Essentially, you have 5 weeks left, and you also have pressure from the European Central Bank. The head of the ECB was clear on this, that she wants to see this fiscal reform done before the end of the year. What I am being told just briefly is that the mood between the French delegation and the German delegation, I'm told it is excellent, it is constructive, and they believe even if there's no breakthrough today, they are getting close to one.
So Lindner, German finance minister, also hit by this constitutional court ruling this week. So what's next, Maria?
Yeah, and it is a lot to his credibility, his reputation, and not just the finance ministry, but also the economy ministry that's handled by Robert Habeck and the entire coalition. Now, Francine, obviously, we know this week we had the story from that constitutional court ruling suggesting that Germany could not use off-budget funding into the climate transition. Bloomberg also has a story that is a headache because potentially you could see up to 700 billion euros that could be questioned in that way. But when it comes specifically to Lindner, it is interesting that he has taken a different tone, saying that this ruling is a moment of clarity, it is a turning point, and it shows that Germany has to set its priorities now, perhaps more carefully, and it is not a question of throwing more money to the problem. And that is something that we hear from Lindner, both in Germany, but also in the European Union. Remember, he said many times in Brussels, he does not see the need for further funding. It's about value for money.
Maria, thank you so much. As always, Bloomberg's Maria Tadeo there in Brussels. Now, sticking with Europe, Pedro Sanchez has won re-election as Spain's prime minister in a confidence vote yesterday. The decision to re-elect Sanchez ends months of uncertainty after an inconclusive election back in July. Well, joining us now is Bloomberg's Rodrigo Orihuela, live in Madrid. Rodrigo, always good to speak to you. So talk to us a little bit about how Sanchez actually got this majority and why it's so controversial.
So he got the majority by signing an agreement to pass an amnesty deal for hundreds of Catalan activists, as we've been telling, over the last few months. This is very controversial, as you say, because for a lot of people in Spain, these pro-independence activists should have gone to court because they broke the law in several different ways, and they do not endorse the fact that he's pushing through this amnesty. This took a long negotiation. It's going to be approved, and to get voted for a new term, he needed support from 8 different parties in Parliament. Most of these are different types of nationalist parties, pro-independence parties. One of them is obviously Junts per Catalunya, which is the best known Catalan independence movement right now, and that's where the controversy stems from, the fact that he was willing to exchange support for an amnesty for hundreds of people who had criminal cases against them.
So what can we actually expect from Sanchez and his next term in office?
So that group of 8 parties that has voted for him has 2 things in common. One, they all proclaim to be staunchly against the far right. That's one of the gels that keeps them together. But the other thing that they have in common is that there's a vast variety of people. There are several parties that are far, far left, 3 or 4 of those. There are 2 who are, you could argue, center left. And there are 2 who are pro-independence, but very pro-business as well. Especially one of them is very pro-business. And he will need support from this entire base to get legislation through. So the big question is, how will he be able to convince all these parties to vote with him? Especially because some of his agenda is quite far onto the left, very pro-worker, anti-business. And it's not very clear how he is going to muster that support.
Okay, Rodrigo, thanks so much. Rodrigo Orihuela there in Madrid. Now let's get some other top read stories on the Bloomberg terminal. And international pressure on Israel is growing, with the U.S. and its European allies pushing a peacekeeping plan. This comes after the Prime Minister, Benjamin Netanyahu, says Israeli forces have found a Hamas command center under the Shifa hospital in Gaza. Now, the average tax collected per UK bank employee jumped by more than 11% in 2022 compared to the previous year. Now, the new data comes from a survey of the sector by trade association UK Finance. On average, the government now collects more than £42,000 a year in tax per bank employee, with increases largely due to government freezing income tax thresholds and a temporary increase in national insurance. Now, Bloomberg understands that Apple has fallen further behind in its multi-billion-dollar effort to make a modem chip for the iPhone. The company will likely miss its 2025 goal to roll out its own cellular modem as it struggles with the complex task of replacing the current Qualcomm technology. Coming up, the Turkish President Erdogan is set to arrive in Berlin today and meet with the German Chancellor Olaf Scholz. We'll discuss what's next on the agenda, as well as other insights with Nils Schmid, who's foreign policy representative from Germany's Social Democratic Party. That's next, and this is Bloomberg. The Conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now let's take a look at the European markets map. Overall, we're seeing gains across the board. A lot of the focus, once again, on some of the negative economic data that we've had and whether that pushes either cuts from central banks or just no longer any interest rate rises. So again, European shares opening higher. We had those fresh signs of an economic slowdown, really prompting investors to ramp up some of these bets on interest rate cuts next year. Now, this jobs, soft inflation, but also jobs data in the U.S. has pretty much fueled conviction that aggressive policy tightening cycles from the Fed and other central bankers could finally come to an end. In other news, German Chancellor Olaf Scholz is set to meet with the Turkish President Erdogan this afternoon in Berlin. Amid the war in Ukraine and the Middle East, Berlin has described the trip as, quote, a visit by a difficult partner. So let's get straight to Bloomberg's Oliver Crook in Berlin for more, who's joined by a guest. Ollie.
That's right, Francine. Thank you so much. I'm joined by Nils Schmid. He's the foreign policy representative for the German Social Democrats. This is, of course, the ruling party here in Germany, chaired by Chancellor Scholz. Nils, thank you so much for joining us today. And so in your position as sort of the chief foreign policy lawmaker for the SPD, it's an important day. You have Erdogan coming here today. It is hard to imagine two leaders with a more distant view on the conflict in Israel between Chancellor Scholz and Erdogan. Is there any common ground? What progress can be made? What can we expect from the talks today?
With regard to Hamas, there is no common ground, and we will see to which extent Erdogan's posturing was tactical, or is it a real political conviction? We've seen similar outbursts by Erdogan in the past, and after some time he came back to a very pragmatic approach, normalizing ties with Israel and so on. But on the substance, this is a profound divergency, and Erdogan will face some harsh criticism by Scholz. Yeah.
And in terms of that pragmatism, do you think that he will come to pragmatism on the topic of NATO and Sweden's ascent into NATO? Where do you see that happen?
I very much hope so. We've seen another postponement of the decision to be made by the Turkish parliament, but in the end, Erdogan can play his regional role only thanks to Turkey being part of the NATO alliance. Otherwise, Turkey would become less interesting to Russia or any other actor in the region. So yes, in the end, we will see a vote by the Turkish parliament.
Yeah. And in a military alliance, and it's no secret that the Erdogan would like some European fighter jets. This is something that has been vetoed by the Germans. Is there anything that he could do, talking to that pragmatism, to get that veto lifted?
I don't think so, because there's a strong opposition inside the German parliament on that account. Americans are still blocking any sale of F-16 or even F-35 fighter planes. And as long as Turkey attacks SDF forces in northern Syria and occupies territory there, which is against international law, I do not see how we can find a common ground on that account. On other topics, there might be an agreement, because we have converging interests when it comes to immigration, for example.
Well, that's what I wanted to focus on. What progress do you think can be made on immigration? Scholz has made this almost very top of the list as a priority now in dealing with the immigration in Germany. What is Turkey's role in that?
Well, for Turkey, and especially for Erdogan and his party, this is also a top priority, because they're going to face local elections next spring. And dealing with refugees in Turkey has become a major issue, especially after the Turkish economy broke down. So sustaining millions of Syrian refugees in Turkey is quite a feat, and that deserves support from the European Union. Since the refugees are still in Turkey, we should continue funding Turkey for helping these refugees. I think a prolongation, a revitalization of this EU-Turkey agreement on refugees is in the making, and this will be very much on top of the list today.
And in the West and in NATO and many of the Western nations, there seems to be a unified voice on the topic of Israel and the right to defend itself. Where there seems to be a little bit of disagreement and a conversation evolving is where the limits to that self-defense are. We heard Emmanuel Macron calling for a ceasefire. This is not something we've heard from a lot of the allies of Israel. Where do you see that diverging within the West? And do you worry about, given Germany's position, support for Israel diminishing?
Not really. We are dedicated to supporting Israel and defending the existence of the State of Israel. We are also committed to this two-state solution. So in the end, we need a political perspective, and this is a very much unifying position inside the European Union. I think the UN Security Council's vote on humanitarian pauses was really helpful, and we should continue on this path.
I have to say that I was in Israel for a long period of time now covering the war, and we hear a lot about the two-state solution from everywhere across the world. I did not hear a lot about it within Israel.
That's a problem, by the way.
Well, yeah,
this has been a problem for some years now, and maybe we need a change in the political leadership in Israel following this surprise attack by Hamas on Israel. And there's a debate about political and also military responsibility inside Israel, which once again demonstrates the vitality of the Israeli democracy. And we will have to see if the Israeli government or a possible new Israeli government is more open to this kind of political process.
And do you take a view on the sort of more medium term of what should be happening in Gaza after the sort of most forceful bit of the military operation is concluded? Netanyahu talks about an indefinite security control over Gaza. Do you have a view of what should replace that regime?
Well, I do not see any Israeli reoccupation of Gaza happening. This is very much opposed by Americans and by the international community. Maybe we should find a transitional regime implying the international community. It will be very complicated, but I sense that continuous international support for the solution of the conflict in Gaza, but also for a political solution, is very much needed. And I hope that the Americans will not turn back to their passivity. But I also want to stress that the Europeans, and especially Germany, need also to remain engaged in this conflict.
And talking about the other war that's going on, and again, it's sort of surprising that we could go talk so long and not talk about Ukraine and Russia, but it sort of demonstrates a bit of kind of the view of what's going on there. Germany was very late to send the tanks. They eventually decided to do so. Do you fear that there's something similar happening with the fighter jets? Is this not just sort of doomed to stalemate and just to grinding on if there's not a major step up in support for Ukraine?
So let me first of all emphasize that the German support might have come a little bit late, but it's very steadfast. And you can count on Germany to continue military support to Ukraine even after the next general election, because there's a big majority inside parliament, including the opposition Christian Democrats. And we will see what will happen, I would say, in 1 year time when ammunition and armament production in Europe has picked up. Unfortunately, it takes a little bit too long. We had expected to have 1 million rounds of ammunition ready by this year. But in the end, Ukraine will benefit from our increased weapons production, since we are committed to continue our deliveries.
And I want to sort of tie this all together and step back and think about this, because these conflicts have sort of drawn new alignments within the geopolitical stage in the world between Russia, China, Iran supplying Russia with a huge amount of military gear. Do you see that as just a sort of allies of convenience, or do you see this as a durable change in the geopolitical order? And how should Germany respond?
I would assess it as a tactical alliance. It's not a sort of a very strong alliance of anti-Western forces. But the war of Russia against Ukraine has created opportunities, for example, for Iran to break international isolation. What is of more concern to us is a divergence of appreciation which has become very visible with regard to the Israeli-Palestine conflict. Many countries in Asia, Africa, and Latin America have a very different opinion on that. And we will have to fight hard in the international community and have to do a lot of diplomatic outreach to make them understand that Israel is the victim of a brutal aggression, and that at the same time we care for the plight of the Palestinians and we prepare the ground for a political solution. But that's much more difficult than in the case of Ukraine, where diplomatic outreach has has won a lot of votes in the UN General Assembly, for example.
And it's interesting also some of the lines it has caused within domestic politics within the West. But on that, we'll have to pick it up another time. Nils Schmid, thank you so much, the chief lawmaker for foreign policy of the SPD.
Oliver, thank you. Oliver Crook there with a terrific conversation, of course, on the way forward. Coming up, we look at today's big take story on China's military strength in question. That's next, and this is Bloomberg.
The scale of AI research talent in China is just simply astounding to see. So I think in some ways this question, China is going to be at the forefront of AI, and I think that's a given.
Well, that was the Alphabet chief executive, Sundar Pichai, speaking to, of course, Bloomberg in San Francisco about the importance of U.S. and China collaboration when it comes to regulation and innovation. Now, China's military is the focus of today's Bloomberg Big Take story. Beijing has spent years and billions of dollars building advanced weaponry and modernizing its forces, but there are doubts that the People's Liberation Army is ready for battle. Now, Bloomberg's Bill Ferries joins us to discuss all of this. Bill, so what lessons has China actually learned from the Ukraine war?
Well, it's interesting. We dug into a lot of documents produced by the People's Liberation Army and analysts who are close to the Chinese military, who are watching the Ukraine war, Russia's war in Ukraine very carefully. And they're raising a lot of red flags that apply to their own military. Things like Russia's plans to have a quick invasion in early last year that would topple the government in Kyiv and effectively replace the government. Russia's inability to have different branches of its services coordinate effectively on the ground. So the troops on the ground, they're not working well with the air power in the skies above them. All of these things that has made this process in Ukraine draw to a stalemate so far. These are the worries that China has when they look at what will happen if they try to take Taiwan militarily.
So what does this actually mean for the likelihood of a conflict over Taiwan?
So what we've seen is that China's very concerned that it not face any setbacks. It does not. It looks at the Ukraine model as kind of their worst case scenario. And I think in many ways that probably works to Taiwan's advantage and to the U.S. advantage. If the Chinese government doesn't think it can have an overpowering win in a place like Taiwan, it is probably less likely to go for that kind of a strategy. The feeling is, among many of the analysts we talked to, both within and outside of China, is that they need some certainty before they go forward with this. China's government wants its military to be capable of taking Taiwan by 2027, but that doesn't mean they're planning to do anything in 2027 or even in the years afterwards. What our research has shown, looking at China's own comments about its military, is that they don't think they're there yet, and that capability is probably years away.
Bill, thank you so much. Bill Ferries there with the very latest, of course, on this great, important Big Take. You can read today's Big Take on Bloomberg.com or just go to NI Big Take on your Bloomberg terminal. Up next, quite a lot going on, of course, when it comes to geopolitics. It's been quite a week also for UK politics. Now, we'll have a full roundup of the top news. Also, this is what stocks are doing today. Now, stocks and bonds seem to be rallying again on this rate cut conviction. When you look at some of the fresh signs that we've had this week, certainly in terms of economic data or economic slowdown, that seems to have prompted investors to ramp up bets on interest rate cuts next year. And then oil, of course, oil prices dropping into a bear market, down some 20% from their September highs. This is Bloomberg.